My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make a little money. My job, not just to entertain, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. All right, we got to do something. We got to figure out why inflation is so sticky, viscous, why it simply won't go away. That is the biggest question right now. To get your head around this market, nothing is as important as understanding why inflation is so darn persistent. Not earnings, not valuation, nothing. Every day we get more data here, and lately it's not encouraging. Hence why the Dow dipped another 85 points, the S&P shed 0.16%, NASDAQ advanced 0.13%. A little better. Yeah, so I'm thinking, let's do the darn Federal Reserve's job for them and explore why this nightmare just doesn't end, despite seemingly endless Fed fund hikes with possibly many more to come. We'll go through the principal areas where the Fed says it's losing the battle against higher prices. Food, housing, and wages. All right, the first, food, it is a bummer. Between the Russian invasion of Ukraine and the ensuing economic sanctions on Russia, we have lost access to something like 13% of the world's calories. Sure, that means 87% is still available. I get that, but food is a fungible item. So the basic foodstuffs will just go to the highest bidder. That's something the Fed has no control over. Jay Powell can't snap his fingers and end the war, and he can't plant a lot of corn. Sure, the genetically modified seed companies, the pesticide makers, the precision farm equipment companies, they are doing their best to change the equation. Yet every time we seem to be making some progress on food inflation, something else comes along that rolls it all back. Intemperate weather, bad harvest, invasion swarmed by insects. Something just keeps going wrong. While this kind of thing happens all the time, we usually have a lot more slack in the food chain. Doesn't equal more at the supermarket. Not this time. But fortunately, somebody's got a solution. It's not the government. It's Walmart. That's right. The largest retailer in the world is working around the clock to get your food prices lower. This is not an advertisement for Walmart. But I got to tell you, for 2 years, the food companies have had the run of the joint. And take a look at those prices. 7, 8, 9, 10 increases. But now we're seeing some backlash. Walmart may have all the branded product you want, but they've also got their own much cheaper brand private labels. Now, you can find it. There's all sorts of private label names for Walmart. The most boring one is called Great Value, but that's the one that's working. The price increases are so stark that I'm a lot less worried about food inflation because Great Value is holding things down. Now, not a catchy label, but listen to this. Let's say you want a can, I don't know, Green Giant asparagus spears. Those are delicious, right? Well, it's $4.98 for asparagus spears from Green Giant. Great Value? How about $2.98? Same darn thing. I mean, you can't really change a spear, right? You don't want to pay $4.58 for a bag of Oreos? How about $2.88 for a Twist and Shout knockoff? I know that some big-time food execs are trying to push back here. Reuters caught Lawrence Cursius, CEO of McCormick, the spice company, saying the other day he's not happy with Walmart's private label efforts. Doesn't like the pushback here. I wouldn't be happy with it either. McCormick sells French's mustard at $1.78 for 8 ounces. Right next to it. You can get 20 ounces of Great Value mustard for just 98 cents. More than twice as much for barely more than half the price. Hey, would you really know the difference? I mean, if I did like here's a blob of yellow, here's a blob of yellow. I mean, right? Let me give you another one. Bragg apple cider vinegar, which my kids like, okay, goes for $6.84. Wait a second. Walmart's house brand equivalent's only $4.98. Okay, so it's not owned by Katy Perry and Orlando Bloom. Do you really care? So I think the Fed needs to stop using the branded prices to measure food inflation. More people shop at Walmart than any other grocery store, and its customers are getting much better prices if they're willing to trade down, so to speak. I'm not even delving into the everyday low prices for fruits and vegetables, even of the organic kind. How about housing? All right, this one's a bit of a catch-22 for the Fed. Last night, Toll Brothers, fabulous high-end company, right, reported a terrific set of numbers with excellent gross margins. Oh, no, that's not what the Fed wants. Worse, business has picked up since long-term interest rates leveled in the fall. It makes sense. As CEO Doug Yearley pointed out, quote, There now exists a deficit of anywhere between 3 and 6 million homes in this country, end quote. In short, we got a huge housing shortage. And while the Fed can raise interest rates to tamp down on demand, it also tamps down supply. This one's tough because, as Jay Powell acknowledged, you got 75 million millennials entering their prime home buying years. Many of them want the American dream, and they apparently won't be deterred by high mortgage rates. When the Fed tightens, they can't do anything to price out cash buyers, but they might make home builders think twice about putting up more houses because they'll get a little nervous. Don't forget, we've also got an ongoing migration from high-tax states to low-tax states because Trump's tax reform capped out the state and local tax deduction. So they're willing to pay more, too. And that you can't asterisk that, oh, well, they're willing to pay more because of SALT. Yeah. Unlike previous rate hike cycles where we're putting up too many homes, the home builders now have tremendous discipline, so buyers have no choice but to pay up. Rates could go up much more than this, and it might not even hurt the cycle. Finally, there's wage inflation, which is sticky because we do have a great labor shortage in this country. The Fed can't just create more people. We could make our immigration policy less restrictive, which would help, but that's politically too controversial. So what can the Fed do? Well, they can take interest rates so high the companies need to lay off a ton of people to avoid going under. We've had dribs and drabs of layoffs, especially in tech, but we need to see some gigantic bankruptcies to get wage inflation under control, and I don't see many on the horizon. Okay, heaven knows we need Bed Bath & Beyond to get liquidated already. We need to see retailers closing stores, not opening them. We need people to stop traveling and going out to dinner. Even the tech companies that are firing people en masse often give generous severance packages. Nice excuse to take an extended vacation, go out a lot to eat. That's not what the Fed wants. So that said, we are getting some real carnage, but it's just now happening, although we'll fight wage inflation. How recent is it? Well, how about last night? Last night, an outfit called ZipRecruiter, which bills itself as one of the leading online marketplaces for job seekers, gave you a simply hideous forecast. Sent the stock down 22% today. Makes me think the Fed just needs to be a little more patient. It'll get things straightened on the wage front. ZipRecruiter represented 42 million active job seekers last year. So this one's not some sort of one-off anecdotal example. As CEO Ian Siegel put it on the conference call, quote, I'd start by saying some things as plainly as possible, which is clearly we're in a macroeconomic slowdown and online recruiting has effectively cooled across the country, especially among small and medium-sized businesses, end quote. He went on to say, quote, this looks very much to be an industry-wide phenomenon. There's no, and by the way, end quote, there's no clear seasonal rebound. Employers have been decreasing their willingness to pay for hires. Many companies are executing layoffs as they tighten budgets, says Siegel. We never want to root for people to lose their jobs, but that's actually what the Fed wants to see. I think last year's monster rate hikes have started to have a real impact on the economy, but it takes time. You know, these people, these Fed people who come on and say, maybe we should do 50, we had those meeting notes, maybe we should do 50. I mean, do they really know? Do they know? I'm closer to it than they are, and I got to tell you, they don't know. I think you have to wait. Meanwhile, we have lots of incidental inflation indicators. We know apparel's allegedly strong, but TJX, the largest discounter, they own TJ Maxx and Marshalls, told us a great story today about new goods coming from retailers doing poorly. When TJX does well, it means the rest of the industry is doing badly. One retailer after another says supply chain issues are no longer a problem. One less reason to raise prices. Natural gas just dipped below $2 today, lowest since September 2020. That could reverberate throughout the system. Oil down again. You'll see it soon at the pump. But the big three, bottom line, food sticky because of geopolitics and agricultural issues, although I've got to say, you got to start asterisking that Walmart number. Housing's all about demographic trends, can't be overcome by high rates. And wages, look, if a recruiting company just told you today, last night, that things are getting tough, well, that's signaling there's going to be a big slowdown. So maybe, just maybe, the Fed is on the right track. Dave in North Carolina. Dave.
Hey, Jim, first-time caller. Nice talking to you. Really appreciate all the work that you do.
Thank you.
Northrop Grumman, the stock has pulled back here recently, and I was curious about your outlook for 2023.
I think Northrop Grumman is going to have a great year. I also think people continue to underestimate how much money we are putting in to the situation in Ukraine, and they're going to have to re-up. And when they have to re-up, our country have to build more armaments. And Northrop Grumman is a great stock in that environment. How about John in New York? John.
Booyah, Jim. What's up?
Booyah, John. Not much. Just doing the show. What's going on with you?
Not much. I'm here with my dad. You know, we watch the show every night. Big fan.
I love that. Thank you. Thank you.
How are you?
I'm good, man. What's going on?
Not much. So
All right.
So we started to use the platform, right? We rent out our condo in St. Pete. It's a good platform. I was in at $170. I sold it before it dipped. I want to know if I should get back into Airbnb.
Yes, Airbnb had an amazing quarter. We had a couple of stocks that we thought were really going to bounce back, where there was misinterpretation with the CEO. CEO came on our show, Brian Chesky, told you all these things were good. The analysts didn't believe it. Next thing you know, boom, the stock's going higher, and it's not done going higher. Trey in Texas. Trey.
Jim, I took a position in Energy Transfer back in July, mistaking it for a Red Bull competitor. And despite this minor oversight, I'm up about 30%. I wanted to see if you think it's worth holding on to in 2023, or if I should take profits and find a growing energy drink brand like I originally...
No. Energy Transfer, I like that. I think it's good. Monster Energy. Look, ET's doing well. I had to determine, it was very reluctant that I started liking because I do not like the balance sheet. But ET is a good situation. I want you to stay along it. All right. Food, sticky because of geopolitics and ag. Housing can't be overcome by higher rates. Wages, rumbles of a workforce slowdown. Maybe the Fed might be on track when it comes to wages. Everybody tonight, the REITs have been a tough corner of the market. So where should investors stand with a stock like Federal Realty? I'm finding out more with the head of the Real Estate Investment Trust. Then Crocs is short after earnings, so could an investment in the stock be worth trying on for size? I'm checking in with the CEO. And Waters has an under-the-radar EV connection. I'm learning more from the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.